Bitcoin clung to its most recent perch comfortably above $17K as investors continue to look hopefully at a more dovish U.S. central bank. DeFi total value lock continued its recent rebound over the weekend. The largest cryptocurrency by market capitalization was recently trading near $17,000, an almost 2% gain over the past 24 hours and consistent with its performance for the past 5 days. BTC climbed above $17,000 on Wednesday and has held fast above this support following dovish remarks by U.S. Central Bank Chair Jerome Powell, who indicated a day later that the Federal Open Market Committee FOMC would likely raise interest rates 50 basis points BPS instead of continuing its current diet of 75 BPS increases. Powell noted encouraging signs that inflation and the still vibrant job market were slowing. In an email to CoinDesk, Joe DiPasquale, CEO of crypto fund manager BitBull Capital, wrote that the market had responded positively to Powell's speech, although he added warily that we may want to see Bitcoin consolidating above $17,000 and possibly testing $20,000 before we expect a sustained recovery. On the downside, $16,000 is a key support, losing which we are likely to see Bitcoin trending lower, DiPasquale wrote. Ether remains steadfast near $1,300, up about 3%. On deck, one CoinDesk market analyst Glenn Williams noted that Ether's price had outperformed Bitcoin over the previous 10 days, increasing 15.4% versus BTC 7% rise. Williams wrote that a so-called crossover of the ETH/BTC 10-day moving average above the 100-day moving average is often a bullish sign, although he added that the recent sample size is still too small to come to a conclusion. Other major cryptos were largely in the green with SOL, the token of the smart contract Solana blockchain platform, rising more than 4%, and Atom, the token of the decentralized blockchain network Cosmos, recently up more than 3%. The CoinDesk Market Index CDI, an index measuring crypto's performance, jumped almost 1.5%. U.S. stock indexes traded roughly sideways on Friday after an encouraging week that saw the S500 climb above its 200-day moving average for the first time since the spring. The S, which has a strong component, fell 0.1% on Friday but was up 1.5% for the week. The tech-heavy Nasdaq inched down 0.2% on Friday. Investors will be eyeing the U.S. Commerce Department's Monday release of durable goods orders for November with initial projections for a second consecutive 1% gain month-over-month. On Friday, the University of Michigan's widely watched Consumer Sentiment Index is expected to tick up a few fractions of a percentage point in its preliminary December reading from the previous month. In a weekly note to investors, First Republic Bank noted a slowdown in manufacturing, showing broader economic growth is moderating, but also highlighted improvements in the supply chain that had lowered costs, calling the reductions encouraging news on the inflation front. Meanwhile, Sam Bankman-Fried continued his recent tour of semi-confessional interviews with the former FTX CEO, telling the Wall Street Journal, "I'd ask myself a lot how I made a series of mistakes that just don't seem dumb. They seem like the type of mistakes I could see myself having ridiculed someone else for having making." BitBull's DiPasquale wrote that he will be watching the impact of upcoming FTX hearings related to its filing for Chapter 11 bankruptcy protection in the U.S., along with the outcome of the FOMC meeting. Any dovish comments then could see the market moving higher, he wrote of the latter.